Welcome to HYCM Insight with myself, Giles Cochran, Chief Currency Analyst at HYCM. The market mood for the medium term is as follows. The outlook for the Australian dollar is turning more bearish after its large risk rally higher. Australia's Treasurer Josh Frydenburg admitted the economy may also be in a recession after the GDP print for Q1 and the projections for Q2 pointed towards recessionary territory. Furthermore, if the Australian dollar keeps rising, the RBA may be concerned about having to raise interest rates given the economy may be heading into a recessionary territory. If the RBA starts to purchase bonds across various maturities, the Australian dollar will likely weaken. Also, US-China and China-Australia tensions will also weigh on the Australian dollar. With around 30% of all Australia's GDP coming from China, any tensions with the yuan harms the Australian dollar. This is why the Australian dollar is often traded as a proxy for the yuan. Asset managers as a group are also net short on the Australian dollar, so watch out for any increase in bearishness. The dollar index has been falling sharply in recent days, and any negative news leaves the Dixie vulnerable to a correction. Technically, the Australian US dollar is up against a weekly pivot point and 100 EMA on the weekly chart marked in blue. This looks like a good place to limit risk with stops above. Therefore, we expect Australian dollar US dollar sellers at markets with stops just above the 100 exponential moving average. We would expect this outlook to play out over the next 2 to 4 weeks as long as the reasons for the trade remain. And the main trade risks are risk-on tones continuing. A very positive NFP print on Friday could boost risk sentiment and strengthen the Australian dollar. Any positive US-China or China-Australia trade news will also invalidate this outlook, as will any very strong recovery from Australia's economy.